just one last question. You were mentioning that there are, in reference, maybe 5 or 6 points that PEGs are looking for, but they wouldn't be the only ones that would want to be focused on those things. And maybe if I include that as a general practice, then maybe I could be hitting more people. So I did write down the sustainable income, the management in place. What are the others?
So books and records.
Okay.
Everybody wants to see relatively clean books and records. When you have 100 ad backs, or not 100, but when you have a P&L and then you've got 30 ad backs in to different categories and all of that. And it's like, okay, so the business owner is using the business as their personal piggy bank instead of operating it as a business. So with private equity and also, buyers, they're going to have a lot more confidence in the financials, the fewer ad backs you have. Okay. You're always going to have some, just because of the calculation of SDE. You're always going to have some, and that's okay. And we know that business owners, part of business ownership is being able to take advantage of that business to get certain things, to buy certain things tax free or before tax, as opposed to with after tax dollars. So, but it can get excessive. And I'll give you an example. There was a manufacturing company I was dealing with. They were showing on their tax returns about $75,000 in profit annually. By the time we finished with the ad backs, it was about $1.7 million in profit, or in discretionary earnings. So at that point, A, it's tax fraud, which is not our problem, but nonetheless. But B, if you're a buyer coming in and you see these guys have been playing that kind of game with their books and records, and it's like, how do you trust the disclosures and the information they're providing to you? Because it's not even like they were in a kind of gray area. I mean, that's just blatant. So stuff like that, so books and records are one of the keys. Documented policies and procedures. If the owner has all of the know-how in his head and is the sole decision maker, then how do you train anybody coming in? How do you train new employees? How does the buyer, the buyer is going to get a certain amount of training during the transition period, but isn't it better if you have your core business procedures documented, operations manuals? And then another thing is goes back to the owner-centricity of the business. So if the owner is a sole person doing business development or bringing in new clients, if the owner is a sole person, basically my question to owners is, if you went off the grid for 3 months, no cell, no email, no anything, could your business operate without you? Would you have a business when you returned? And if the answer is no, then there's too much owner-centricity, and we need to address that. And so then it becomes a matter of, okay, what do you do every day? And let's document it, figure it out, and then start figuring out who on your staff can we start delegating pieces of this to. Same thing, if an owner is working 60 hours a week, buyers these days don't want to work 60 hours a week. Not going to do that. So again, it's, what are you doing? Let's document it. Let's figure out who you can delegate what to, start offloading this stuff and get you down to where you're working maybe 10 to 20 hours a week, max. The more irrelevant a business owner is to the business, the higher the value will be. And it's very difficult for business owners to understand that concept, because they put so much, they've put their soul into the business. It's an integral part of them. And so for you to tell them, hey, you need to become irrelevant to your business, it's just like, what? But that's just how it is. So yeah, if their people are well-trained, can operate the business without them, definitely going to have a higher value. Okay.